From a regulatory capital perspective, there's an element of change if you look at the key sort of trend over the last probably 18 to 24 months, be it the European Banking Authority issuing guidelines, but also regulatory standards in terms of definition of default, probability of default, how do you estimate sort of risk in a more granular way. Then you look at the ECB guidelines in terms of their particular sort of aspect on targeted review of internal models. You look at the finalization of Basel III, and then you add on top of that the proposals that were made recently for the amendments of the capital requirements regulations, so the CRR2. So you take all of this in totality, there's sort of a wave of change that is going to impact regulatory capital. And the sort of steps that you might want to think about, well, probably sort of broadly speaking, three-step approach. Step number one is to look at the entire regulatory sort of drivers and requirements. One of the things probably is worth doing is to look at the degree of overlap between the requirements, interconnectivity between the different sort of areas. There are also opportunities for synergies between the different sort of regulatory standards and guidelines that are emerging and are sort of perceived to be new. The timeline is very tight. Some of those requirements have to be met by 2021, and it's probably step one really to look at the entire piece in a sort of comprehensive way. Step number two then is, once you know what are the requirements and you understood the degree of overlap, is to look at what's the implications, what's the assessment. So there's a piece of assessment around, would you look at the operational piece first? So from a data, systems, operating model perspective, the processes, do we need to change anything? Are there any additional reporting requirements or sort of system that needs to change to cater for those new requirements? But also from a strategic perspective, there's an implication in terms of a business model of any particular bank. Depending on the type of business model, there could be some certain aspects that need to be considered. For example, some of the requirements will have potentially more funding requirements or more capital intensive requirements on certain products. So then there's a question about, do we look at this from a perspective of product mix, product structure, pricing of products, or capital allocation? How do we redistribute the amount of capital to make sure we still have an efficient sort of capital generative and productive business? And the third step really is to paint that sort of target view of where do we want to be, and then how do we get there between now and 2021? And ultimately, it's a plan, and the plan has to be sort of delivered within very, very tight timeline.